we need to tell the story better of what security tokens are and why this is going to be one of the biggest industries in the world. You're going to see massive demand. We saw that and we're seeing it now, but just the demand was there. Just the regulation wasn't there. Now that those, everything kind of have a structure in place, still we want the SEC to come out and make it even more clear, but you're seeing a ton of these platforms being launched now and more companies taking this route. But we need to tell this story because everybody I tell this story to is fascinated, absolutely fascinated, because every company in the world is looking to raise money. Every company is, right? You want to grow your business. That's every company. It's like marketing, the ultimate secular growth trend ever. People are always going to pay to market their companies. They want to raise money. It's very difficult to raise money unless you have an amazing company that's generating a shitload of sales, and that goes directly to the Goldman Sachs and Morgan Stanley, stuff like that. What if you have a growth company where, you're doing 3 million to 10, 15 million in sales? It's not easy. You might be able to get investors, but those early investors, they're not really interested in the long term of your company. They're interested in how am I going to get my money back immediately and make 5x, 10x my money immediately? How could I do that? So they're going to come in, take a board seat, and they'll write you a check for 5, 10 million. That's all cool until they're basically, running the show, running your company. The culture changes immediately because they're not used to the culture, right? They're just looking to get in. How could I make this the most exciting as possible by the time we launch and make a shitload of money for ourselves? And then we're out and we'll go to the next company. That's what it is. That's what it is for a lot of these companies. And look, when I started this thing in 2018, here's what I saw. I saw a way to raise capital by selling off a piece of our company, Curzio Research, which a lot of companies, especially private, don't like doing. But it's going to inflate your valuation tremendously because you're a publicly traded company. So you sell a portion of it. And this will get investors direct equity stake in my company. I'm not talking about, if you buy our token and you see it with security tokens, it's backed by an asset. And if we generate profits, most small companies aren't going to generate profits for a long, long time. That's fine. A lot of that money needs to be poured back into the business. I mean, we've seen AT&T get nailed today because they cut their dividend. I mean, they're going to save $5-6 billion, still have a 3% yield instead of a 7-8% yield, which was already on the table, and it's not getting nailed today. But now you're going to throw all that money into growing streaming, growing your company, buy more 5G properties, Spectrum. These are companies going to be generating $25 to $30 billion in free cash flow. So yeah, people are pissed off right now about the dividend. I get it, but holy cow, that's what you want to do, right? They're a growth company now. They're into streaming now. Discovery is, and they're the second best platform behind Netflix, much, much better than Disney Plus. And their content is great. Getting back to the token, and this is going to give investors direct equity stake in my company. Again, not percentage of profits. As we grow, you grow. And our original investors, where we did a Reg D filing, so it's only available for accredited investors, will be able to trade their shares and their tokens after 12 months on an exchange or alternative trading platform. Think about that for a minute. It's pretty significant, given the average liquidity period for a private investors is 7 years, meaning it takes an average of 7 years before early investors could cash out, which would be through an IPO or if the company was acquired, stuff I mentioned to you in the past. Let me get more into detail about this and why this is important and why security token is going to be one of the greatest markets in history. And it's so super early. 7 years is a very, very long time. A very, very long time. Which is why you saw the explosion in SPACs and their popularity. It's been a bull market, a super bull market. Would the market go up an average of like 22, 23% over the last 3 years? Which is, 3x more than historically? Got the government flooding the markets with money, liquidity everywhere. Easy to raise hundreds of millions of dollars. Pretty easy. You can raise $10 million for almost any project you want right now. Not right now. Interest rates going higher, different environment. But you're looking at 2020. 2021, go back to 2019. So now we have these SPACs and the explosion. SPACs were popular at a time that weren't popular anymore. Why did they become popular again? Here's why. Because the main investors, the big investors, large hedge fund managers, billionaires, celebrities, Ackman, Chamath, Branson, Alex Rodriguez, Jay-Z, all found a quick and legal way to get rich quick, right? To get rich as fast as possible. This is how you do it. It's basically a scheme. It's legal, but they found a way to bypass the system, and that's why you're seeing so many SPACs being launched. Now, there was 59 SPACs launched in 2019. That amount surged to 248 in 2020. See the popularity. And last year, 2021, and it slowed down tremendously towards the end of the year. There's a reason. SEC came out and said you have to disclose a lot more stuff. But over 600 were launched last year. Okay, that's from 59 SPACs in 2019 to over 600 in 2021. And that 600 accounted for 60% of the total new listings, including IPOs, launched last year, which they raised around $160 billion. And this broke records in terms of number of deals, amount raised, which dates back to the 1990s. Holy shit, 1990s. When you see shit broken, it's like, hey, we did this in 2007, 8, 10, 11, whatever. 1990s. That's how hot the markets got for new listings. And why did SPACs get popular? Because it provided a way for institutional investors and insiders to cash out early, where they create this blank check company, which is listed on an exchange, to holding company. Be listed there for whatever. They say like 12 months, 18 months. I think you have up to 2 years. Some of them say 6 months, usually like a year, to find a company that they're going to merge with, they're going to purchase. And they wait until they find the perfect name. And once a stock begins trading, they're allowed to dump their shares pretty quickly, sometimes in a few months, sometimes even shorter durations based on if their stock price went higher, which was the case with DraftKings, one of the early ones. Where insider lockups, I think, were shortened from 180 days to maybe 2 months. It's based on where the stock price went. And the stock price took off. It went to over $65 a share. That shortened the lockup period where insiders were allowed to dump. I think it was September and then in October 2020. Look at the chart. No coincidence. The stock crashed, cut in half almost immediately. Then that was early on. I believe that was 2019. So it's 2020. And then 2021, it still was hot, the SPAC market, and that stock went up again. But now it's trading in the low 20s. $65 a share. Now, the best part of this, which people don't explain, and I'm going to show you why this is such a boom to the security token market, is these insiders get super cheap stock, sometimes in the pennies, 50 cents, $1, even $3 to $4. They're also issued a shitload of warrants that they were not required to disclose in their filings. Think about that. These warrants, as the stock goes up, and the stock is probably going up, so if they're selling it or they're making these pipe deals and they're saying, hey, you can come in at 4 or 5, and we'll give you a bunch of warrants that are exercisable at 7 or 8, these things are like at 13, 14 coming out. They're almost able to immediately convert the warrants and sell them. So they made an absolute quick fortune, which is great for these guys. Now, in order for this system to work, you need a bunch of suckers. And that's you. That's you. Retail investors. And I'm not putting anyone down, but I'm saying that's what Wall Street does. It preys on the weak who don't understand. Now, what don't you understand? You don't understand that these guys are going to get you super excited. They're going to take over a company that's either involved in space, crypto, AIs, EVs, data analytics, crazy ESG technology, carbon credits, all the nice buzzwords, do a big roadshow, get you excited, and they know that the retail investor, they're going to invest with emotions. They're not going to look at the valuation of this company. They're not going to look at the valuation that this company was $300 million and 4 months ago, but now they took it over as a SPAC, raised money, and now the valuation's $3 billion. Nobody's going to pay attention to that. What happened in those past few months that increased the valuation 3x, 4x, 5x? Nothing. It's a roadshow. These guys are great. That's what they want to do because their lockup periods are short and they got really cheap stock. Then they tell that great story, and it needs to be great. Again, the fundamentals in these companies are insanely rich. It's like buying a Snickers bar for $500, but nobody cares. Going to space. Going to space. Carbon credits. AI. Wave of the future. Robots. Whatever. So now they launch these things at a price point of $10. That's where it starts. And now it's a company they're buying, which helps the stock run up 30 to 100%. That was the model. That 30 to 100% run up is you, retail investors. That's the liquidity event. You want to create a massive liquidity event. Liquidity event is tons of shareholders coming in because you need the liquidity event in order for these insiders to dump the shares right in your face. So that liquidity to all insiders, right? Billionaire celebrities, that's what SPACs create, to dump the stock right in your face. And quick note here, I said the liquidity period is months. However, the clock starts when you create the SPAC. So if you have a 6-month hold period and it takes you 7 months to purchase that company, by the time it gets traded, you could sell on day one. Pretty crazy. So you're a SPAC just sitting on exchange 6 months before announcing a deal. Your lockup period already expired. You can sell the stock almost immediately, convert the warrants, and sell it. This is the formula. And this formula is absolutely fantastic for institutions. Get rich quick, get out, and then go on to the next SPAC. That's what these guys done. While retail investors, you get left whole in the bag. Black Sky, Momentus, Spire, DraftKings, Virgin Galactic, Beachbody. Draw down more than 60% from their highs. In fact, the average SPAC is now trading 60% below the price from when they first started trading to the public. People got wrecked on these things. And it makes sense because they inflated these valuations and dumped the shares right in your face. But this is the reason behind SPACs and why they made a monster comeback. They're like, holy cow, we're going to be allowed to do this and just let's murder these retail investors. They don't know better. They're not going to really look at valuation or anything. They're just going to get excited about the story. But the biggest investors are able to shorten their liquidity periods to where they will launch a SPAC, acquire a growth company, and sell out a big chunk of their positions, 5x to sometimes 20x, even 50x gains in less than a year because they're sitting on cheap stocks, sometimes under $1. Somebody owns that stock. But now the gig's up. The SEC came out and said, we want more disclosures on these. Notice how SPACs are not coming out as much anymore. Plus, you're taking liquidity away, which is a big deal for crazy situations where Rivian could generate $1 million in sales and have a $100 billion valuation based on future growth. I could see 20, 30, 50 billion. I think they have the best technology in space, but 100 billion is a little bit of a stretch, and that stock's cut in half. That's why SPACs are not popular anymore. But last year, another new trend surfaced, which was even a bigger slap in the face to retail investors. Getting to the point here why security tokens are going to be a monster industry. So the trend that surfaces direct listings. So in a direct listing, the company sells shares directly to the public without the help of intermediaries like investment banks. So no traditional underwriters involved. And investors love this because they hate Wall Street, and this works for companies that have massive platforms and massive people that use their products. So if you have millions and millions of people, you don't really need, right? That's what the investment banks bring to the table. They bring all these investors, big investors, but if you have a massive file that loves your company, has been using it for 10 years, you can raise money on your own. And we raise money on our own without institutions. Not direct listing. I mean, if you look at direct listing here, now it's selling these shares to investors on day one. I mean, you have Coinbase took advantage of this, so did Robinhood. The companies with big client bases, again, can do this since they have that massive platform of investors that will buy this. So Coinbase was a pure direct listing. Robinhood was an IPO, but created something called IPO Access, where they took a percentage of that float, and if you had an account on Robinhood, you could buy these shares on day one. And you don't have to be accredited, which is cool. It's cool for Robinhood to sell non-accredited investors because these are investors who aren't used to this system, and they're like, holy shit, IPO, I get to buy Robinhood a little bit before everybody else. That's great. I don't have to be accredited, right? I'm an insider now. And there's no minimum of shares you need to buy. So you could buy 10 shares, 50 shares, 1,000 shares, 10,000, whatever you want. Sounds great at first. But wait a minute. Because you do a direct listing instead of an IPO, this allows insiders to have no lockup period. They could sell on day one. And what's day one? Day one is the day that the most excitement takes place. And likely the highest point your share price is going to be. Because of the valuations that these things have come out with. Not normally, you see Microsoft, Google, the trillion-dollar companies go higher and higher, NVIDIA, get it. But the valuations that these companies are coming out at is anticipating massive growth for the next 25 years. That's how high these valuations are. But these insiders get to sell on day one. So if you look at Coinbase, Coinbase opened up 250, went to 350 in a few days. It's now in the 200. A lot of insiders cashed out. Lots of insiders cashed out. Robinhood surged to over $80 a share within a few weeks. The excitement wore off. Now the stock is 12, 13. And surged to over $80 a share. Day one. That's the day where everybody went. That's the liquidity period. All the volume. Makes it easy to dump your shares. Now, where I'm going with this? If you could find a way to invest super early in a company and shorten that liquidity period for investors to where they could sell their shares pretty quickly and not locked up for 7 years, it creates an enormous market. Massive, massive hundreds of billions of dollars. We've seen it with direct listings. We've seen it with SPACs. However, these vehicles, special listings, they were created, excuse my language, to fuck you. That's what they're created for. Make institutions, billionaires, even more effing rich by taking full advantage of you. And nobody's looking out for you. Crazy. When you know the full story. I bet you didn't know. I hear so many young investors buying this SPAC. This SPAC is awesome. This is great. Yeah. But you don't even know the fundamentals. The insiders are dumping in your face. And we saw Chairman Richard Branson go in front of the New York Stock Exchange telling space travel is great. And the stock was what? At Virgin Galactic was at 10? 12, 15, then went higher, 20, 30, 40, kept going higher and higher and higher. These guys like, this is great. Well, now they all sold out, made hundreds of millions of dollars for themselves. And now the stock is what? I think it's below 10 again. I mean, Chandler's promoting the shit out of it at 17, 20, 30. You would think he would buy more here. No, he's not interested in buying more. He got his money. That's the point. Now into security tokens. Security tokens are not just great for the issuer, like us, Curzio Research, who saved boatloads on fees to raise money to help grow our business. No investment bankers are involved. Legal costs, accounting costs were like 10% of you would pay in traditional IPOs. I would say paid about $300,000, which sounds like a lot, but a lot of that takes place after the capital raise. So you put up the money, you raise capital, and some of that is going to be allocated to legal and stuff like that, right? Because you're growing the company. Especially as that lockup period ends and you're actually going to be publicly traded, where retail investors could buy your security token on, I can't tell you how many new security token exchanges and platforms are popping up in the US. I'll get to that in a minute. But that's great. Again, it seems like a lot in cost for a small business, but a lot of that can come after the capital raise. Because once that's where the IR department, everything, right? You have to get everything locked in, talking to the alternative trading platforms where you're going to be traded, more lawyer stuff, but much, much, much cheaper than going traditional IPO. But it's also great for who? For you, the retail investor.